Welcome to another video. Today, what we will be doing is performing a full breakdown of a pair from a multi-time frame analysis perspective. So checking first the technicals and then what we have from a COT perspective. So commitment of traders, what the biggest banks and institutions, the biggest speculators in the market are doing. And by using the combination of the technicals and the fundamentals, we will be able to identify the best zone for a potential trading opportunity. So I really suggest that you stick to the video until the end because it will be filled with value. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel and I will see you in the video. Okay, so let's make a full breakdown of the situation that we currently have on CHF JPY because it is a very interesting pair to follow for a potential trading opportunity. And as usual, I will try to keep the analysis as educational as possible so that you will understand exactly what you have to look for when you are scanning the market for a potential trading opportunity. And obviously, by the end of the video, you will see exactly where we have the best probabilities of seeing a trading opportunity on this pair. So let's start our full analysis on it from the monthly time frame. Now, what do we have on the monthly? We have a market that clearly has created a perfect impulse, perfect correction, and we would like to see the market make the continuation to the upside and create a higher high, basically to complete this impulse correction and impulse pattern to the upside. Now, why did the market make this retracement in the first place? Well, there is one very important concept that you need to know. Every time that the market creates an impulse, you expect the market to make a retracement. So you have an impulse, you want to see a retracement, impulse, retracement. And these retracements are exactly where you want to be looking for potential trading opportunities to the upside. And in general, what you also had here as more confluence for this move to the downside. And if you remember, I made a full breakdown on TradingView. And from this area, I told you, be expecting the market to make a move to the downside for the following months to basically create this wave to the downside. Why did I want to see that? Because the market clearly had created this overextended W formation. If you have a market that makes an impulse, a retracement, a lower low, and then a higher high, what you basically expect is the market to make a move to the downside to go and complete the W formation at the neckline, aka at the previous resistance, now turn support, which in this case was exactly here. In fact, this level here was the previous, a monthly in this case, resistance, okay, which is now turned support at this area, and you expect the market from here to make a move to the upside, right? You want to see the market first complete the pattern at the neckline and then create the continuation to the upside to complete the impulse correction and impulse pattern to the upside. And the last thing that I want to show you on the monthly for CHF JPY is that if you take your Fibonacci from the low to the high of the impulse, and remember that that is exactly where you have to take your Fibonacci if you want informations on the retracement. So every single time, if you want informations on a retracement in the market, you have to take your you have to take your Fibonacci on the impulse leg, which in this case is from the low to the high. And what you can see that the retracement went exactly to the 50% retracement. Now, why did the market want to respect from a closing perspective this level? Because it is the Fibonacci level that is aligning the best with structure. Now, strictly speaking, the 50% is not a Fibonacci level, but it is a quite important structure level when it comes to the retracements, because it means that the market has retraced 50% of the impulse leg, meaning that here exactly at the neckline of the W formation, the market has retraced 50% of this impulse to the upside. So on the monthly, everything is clear. We would like to see the market continue to the upside for the creation of a higher high. Now, when we go down on the weekly time frame, what kind of situation do we have? We have the market that clearly has created again a very strong impulse, a strong correction, and after an impulse and a correction, as we said earlier, what do we want to see? We want to see the continuation to the upside for the creation of a higher high, and that is what the market is currently trying to do. Now, if you remember, I made a full breakdown on TradingView telling you from, or maybe it was here on YouTube, telling you guys expect this move to the upside, and in fact we were able with students to capitalize on this move to the upside. I will link the analysis in which I tell all of you basically that from here we can expect the market to continue to the upside in the description of the video, so you can go and check it out for a further reference. Now, after the impulse, if you want to measure the correction, as we said earlier, okay, on the monthly, where are we supposed to be taking our Fibonacci? On the previous leg, which in this case is from this low to this high, and clearly the market also here retraced to the 0.382. Now, if you're asking yourself why exactly to the 0.382, because it is the Fibonacci level that is aligning the best with structure, in this case with the previous resistance here that we have acting as support at this area, and from here we definitely expected this continuation to the upside. Going down on the daily time frame, what is the situation? Now, on the daily time frame, there is again another very interesting thing, because remember, okay, first of all, from here we wanted to see the market make this move to the upside, and we capitalized on this move to the upside with students, and I will put the analysis in description of basically me explaining before the trade why we wanted to see the move to the upside. Then again, from here, what did we want to see? We wanted to see the market make this move to the downside, a correction, and then the continuation to the downside. And that is exactly what the market did. And again, I will link also that analysis in the description for you guys that hadn't already seen it. Obviously, it's already published on TradingView, but after this impulse and correction, we definitely wanted to see the continuation to the downside for a series of reasons. I won't explain all of them here again, but you can go and check it out in the description. I will link the analysis before the move to the downside so that you can see all the reasons. But mainly the reason for which we wanted to see this move to the downside is because this was an extremely strong level of resistance, acting as resistance here, again resistance, and again resistance at this zone. So definitely we could expect a deeper retracement before the continuation to the upside that we already wanted to see from a monthly perspective. So this was just a short-term move to the downside, exactly as we wanted it to be. And now the market is continuing to the upside, and it has broken back to the upside, creating again a bullish structure. Now, before I show you how we will be approaching this kind of situation with students, let me first show you what we have from a COT perspective, so commitment of traders. What the biggest banks and institutions are currently doing in the market, so how are they positioned? Because by looking their orders, you can definitely gain an advantage over your competition in the market. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Okay, so starting from the CHF, what kind of situation we have? We have clearly institutions that have been clearly longing the CHF. Why? Because we went from minus 4k net positions, so from a situation where we had way more shorts than longs from an institutional perspective on the Swiss franc, with 15k short positions and 11k long positions, to a situation where we currently have way more longs than shorts, 13k longs and 4.3k shorts, and the situation is still the same. We still have more longs than shorts. Obviously, we have also a new report now, but clearly in the long term, we have seen a clear increase of the net positions. Now, if we go and see what we have from a JPY perspective, what we can see that we went from minus 56k net positions all the way up to plus 34k net positions. So from having way more shorts than longs from an institutional perspective on the JPY to having more longs than shorts, with 57k longs and 23k shorts. Now currently we have 44k longs and 27k shorts with a 16% in net position point of view, but it's very important to say that first of all, there is also a new report after this one. Second of all, the JPY in the short term has been decreasing in strength. So it is riskier to be looking for the continuation to the upside, but okay, there is definitely a possibility to see it because the CHF has been getting stronger in the long term and the JPY has been getting stronger as well, but in the short term we have seen a decrease in the net positions. Now from a technical perspective, as we have already seen, the market has now broken the structure to the upside. We had support here, the market broke that support to the downside, but now it broke it back up. So previous support, turn resistance here, broke back up, turned against support, which is this pattern. This pattern is an inverted head and shoulders because you have a move down, retracement, lower low, equal high. After the market creates something like this, what do you want to see? You want to see a small move to the downside and then the creation of this inverted head and shoulders for the continuation to the upside and creation of a higher high. So basically with students, what we will be doing, we will be waiting for the market to actually retrace it back to this area here. Okay, we will be waiting for the market to make a retracement for us back to this area. Let me show you. So if the market will make a retracement back inside of this area, then here, this is where we have the best probabilities and best risk to reward, and we will be monitoring price action with students inside of this area, waiting for the market to shift from a bearish market to a bullish market from a 4-hour perspective, because always remember that the monthly, weekly and daily time frames are the best time frame for the direction of the market. But when it comes to entry, the best time frame is the 4-hour time frame. So with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a beautiful risk to reward and very good probabilities for the move to the upside and completion of the monthly impulse correction and impulse, as we have seen at the beginning of the analysis. But it's very, very important that when the market will reach this area, we will see proper bullish price action, because remember that the JPY is still quite strong. So obviously, if we will see everything just melting to the downside from a 4-hour perspective, when the market will reach this area, then obviously we won't take the setup. So obviously, as usual, be reactive in the market and not predictive. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply these strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video.